Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for joining us today. If you've been with us all morning, let's make it worth your while and continue with that. And if you're just joining us, appreciate you just joining us. All right, I'm here to talk about your money, and your money are these markets. Let's get to them and see what's happening. How about corn? Let's bring up that corn table. This is a little bit better than it was yesterday. Yesterday was a tough day, right? March, we're up 6 3/4 cents in that front month. 6.44 3/4 is last. Now 6.45. So we're about 2 cents off the highs in March corn. May's up 6.5 cents to 6.44 even. All right, we like that one. Let's move along here. Got a sneaking suspicion this one's a little bit better, and it is. Look at this, 28 1/4 cents higher. All changed, as they say on the train. 15.79.5 is last in that March soybean contract. That's some good going there. Up 28 1/4 cents. 27 1/4 cents higher in the May right behind it. 15.83 even, about 5.5, 6 cents off the highs there. Moving right, let's take a look at new crop Novi beans. That's what's going on over there. Let's take a look. That one's going to be a little bit better by 17 3/4 cents. So look at that, almost at 14.50 new crop beans. Maybe we should start hedging. How about wheat? What's going on in that wheat table in Chicago? Chicago wheat, we've got a March contract up 1 3/4 cents to 781.5. May's up 1.5 cents to 787 1/4. So a little bit of a positive wheat board in Chicago. Kansas City, what does that have for us? The hard red wheat there, much the same as Chicago. March is up a penny, 8.07. We have had about a 14-cent range there today. May is up a penny and a half at 8.11 1/4. Moving right along, not to use the word moving too much, spring wheat in Minneapolis, 3 1/4 cents lower. 9.49 3/4 is last. May's off 2 1/4 cents at 9.48 1/4. Those are both well off the lows, so not quite in the danger zone yet. Let's take a quick look at cotton. What's happening at cotton? Cotton's off 44 points in that March contract. 122.60, still a decent price there. All right, let's bring on our next guest analyst from CHS, Tony Headrick. Hey, Tony, what do you got for us? How do things look in the energy sector?
Well, Scott, thanks for having me as always here. Well, it's quite a different day than yesterday in the energy sector with respect to keeping eyes on what's happening with Russia and Ukraine, and also today looking at inventory statistics for last week from the EIA. We are rebounding quite nicely here, up $2.40 on crude oil. 94.50 is where crude oil stands here in the nearby, and we're looking at some pretty decent strength in products as well. Diesel or the ULSD contract up almost 3, and then the RBOB or gasoline up almost 4. And so we did see some pretty supportive inventory stats come out last week. One thing that I always zone in on is really the total inventory of all petroleum that the EIA reports on. We continue to see really broad-based drawdowns in inventories amid a demand profile that's fairly strong. In fact, last week we saw almost a 12.6 million barrel decline in overall petroleum inventories. So that's if you include crude, gas, diesel, propane, jet fuel, base oils, etc. And so that's continuing a trend that's been going on for more than a year and a half. And so that's really the key factor that I'm pointing to that's continuing to provide that support across the energy complex here into the coming weeks and perhaps months yet.
Yeah, I think that you're in the catbird seat right now as far as business goes and what we're going to be watching, because we've got some Fed minutes today I'm sure you're aware of, and then they're going to be embarking upon a interest rate hike campaign, right? And I think that energy is going to be a big part of that, because my concern, or at least there are investor concerns, that with the tightness that you just mentioned in crude oil, or at least in the energy sector, while we see interest rates ratchet higher to help kind of get inflation under control, energy is such a large part of our inflation issue here, Tony, that you could see some of these interest rates, or at least part of them, kind of canceled out by crude oil making it over $100, $110 a barrel. So this is going to be a big story, I think, going forward. And I think energy versus rate hikes is going to be the play here, and we'll be interested to see how that turns out. But I really appreciate you coming on, and boy, we're going to really need your help in the near future. So even more than we have done so far. Thank you very much. Tony Headrick from CHS. He joins us from Minnesota. We're going to go away, pay some bills, and come back and talk livestock after this.